Okay, good evening, everybody. Good evening, and welcome to our session. And we're going to be talking about using financial statements, in particular in your digital business, and how they're going to be relevant and how you can use them to make decisions. What I'm going to do is I'm going to just turn on my presentation here. If you can hear me, please put the letter Y in the question box. And once you do that, we'll just go ahead and I'm going to turn on my screen and we'll get started. So if you can hear me, okay, great. Thank you, Lucy. Okay, let me turn things on here. Okay, so tonight we want to talk about using financial statements to make decisions in a digital business. And I want to start with just some preliminary concerns we have talked about with Quicken Home and Business and some rules of thumb in terms of using the software. And I think that if you are doing these things, then the financial statements you're going to be putting together are actually going to be relevant and they're going to actually help you to make good decisions. And you really do have to do the things I'm going to be mentioning right now. While everything in doing these things are going to be optional, these things will really make your life easier if you're going to use the program. So all these financial statements are basically designed to give you, decision-making information. And one thing that I want to encourage you to do is you also want to try to use this at the same time to provide your tax professional some information. So in other words, we're not going to create these statements necessarily to give to somebody so that we can, so we can try to get a loan, or we're trying to impress investors. Now, if you want to do that, more than likely you probably want to use something like QuickBooks. What this is really designed to do is to make sure you're capturing everything and that you're accurately reflecting what's happening in the business and using that information to make decisions. And so while you do that, you want to map things to so that at the end of the year you can actually take your Quicken information, you can give that to your tax professional. Let me show you what I'm talking about here. I'm going to go into the program here, and if we were to if I were to just take a look at the category list, one of the things you're going to see here is if I look at business expenses, you might see that some of these say Schedule C, advertising. Another one says Schedule C, car and truck expenses. Schedule C, returns and allowances. And so I'm going to be encouraging you tonight to create certain categories. When you create those categories, take the opportunity while you do that and then make sure you're mapping it to specifically to where it goes on your Schedule C when you actually do your taxes. And if you're in Canada, you're going to want to do that to whatever your small business form is called, because this is actually a time-saving mechanism, and it's also going to make sure, it's also going to help you to make sure that your taxing statements really do match and reflect what's in your Quicken, or match what's in your records. And if you're setting up for, let's say, 2018, you can actually sit down with a tax professional now and you can start talking to them. When it gets around April and it starts to get into January, it's really going to be too late to start talking to them, because they're only going to want to sit down with people who want to get their taxes done, and they're going to want to make sure that they're spending their time on those clients. Of course, I mean, if you're willing to pay a tax professional, they'll sit down with you regardless. But I really want to encourage you that if you're going to use this, that you go ahead and as you start creating line items, you start creating categories, that you go ahead and sit down, make sure you're mapping what you're doing appropriately, and you'll want to check with them to try to talk through where the particular expense is and how it should be classified on your tax return. Okay. Okay, so that's what I mean here when I say work with your tax professional on category mapping, right? We just talked about category mapping. Be meticulous about handling receipts and develop a process for that. So in other words, if every time you're going to if you're going to buy something, whether or not it's online or whether or not it's something that you buy offline, you really do need to have a process where you enter that receipt, where you not only make the entry into Quicken, but you also track the receipt and then you put it inside of your business. Now again, you might be doing this already. I know there's services out there like Shoeboxed. They actually put that in a form. They make it available for QuickBooks, but you need to have a process for handling all receipts. And you can actually, a number of us who are online marketers, we buy things, we probably keep all the receipts together in an email box. I'm gonna encourage you that if you go beyond that, and that you also start taking your receipts, maybe scanning them, maybe printing them as a PDF, and that you attach them to the transactions that you have for on the inside of Quicken. Right now, so in other words, just really be very detailed about that, and that doesn't mean that you have to be perfect. It does mean that every time you have something and you have a receipt, attach it to a transaction inside of Quicken. That is what meticulous means. So if you get that, please put the number 1 in the question box if you understand what I mean when I say that. So you incur an expense. Let's say you go out and you buy an information product. That information product is going to come back. It's going to give you an email receipt. You want to take that receipt, print it into a PDF, attach it to the specific transaction in Quicken, and be done with it. Is it more work? Yes, but will you have records at the end of time when it comes to tax time that you could actually use with your tax professional? Yes. Right? And if you do the work up front, obviously it's going to help you later on down the road. If you can, consider someone else keeping the books. If you have a significant other or you have somebody in your stable of people, this does not mean that they're going to be the CPA, but in terms of just showing them how to operate Quicken and how to enter things and how to scan things, you can actually have somebody to do that. Right, and obviously it's going to need to be somebody that you trust. But again, consider somebody else doing that, and then paying that person in order to do that. A son or a daughter could do that. As much as you download, as much as you can, download the transactions from your financial institution. And this is kind of just the easy way of operating Quicken, rather than entering in every individual transaction. That just does not necessarily make this a time-effective process. It becomes a time-effective process when you can download the transactions, and then what you're going to do is you're going to change those transactions into memorized ones, so that the next time they come over, they automatically go to the right category. Right, and then lastly, and we talked about this in the course, make sure you account for cash transactions using your mobile device as they happen, right? So don't wait until later in the week, or even later in the day. If you can actually use your mobile device, and we taught this in the course, that you could enter that receipt right there on the spot. All you got to do is take a picture of it and then upload it to your Quicken app, and then you can sync that with the desktop application as long as you're using Quicken Sync. Right, now, if you're not syncing because you're not necessarily comfortable with the data sync or putting your data in the cloud, then you won't be able to do that. But if you are, you can definitely sync that data from your mobile device that you just uploaded to the program you're using on the desktop. So let's talk about some other preliminary concerns when it comes to Quicken Home and Business. If you're a freelance business, most of what you're going to be doing is going to be a cash expense. Most of what you do will be cash income when you earn it. So once again, we're not going to use the accrual method of accounting, so we're not necessarily trying to recognize revenue when we earn it. Right? We're going to recognize the income when we get paid. Right, now again, if you want to work with your tax professional, you want to do that differently, you can do that. I don't necessarily know if there's an advantage to doing that, declaring revenue. Obviously, you want to declare revenue and expenses in a way that's going to minimize your taxes. When you're actually invoicing people with Quicken, this is the same concept that I just described. You can delay the accounting until you actually receive the funds. Right? And then when you go out and you buy a product, and they're going to give you, let's say, 30 days, they're going to give you credit for it until you actually pay it. That's the same situation in reverse, right? You don't want to declare the expense until you've actually paid the money out of your PayPal account, right? That's certainly possible. When you're using Quicken Home and Business, again, you want to try to run this as a cash business. And the fact of the matter is that waiting to recognize the revenue is pretty smart, because you can actually, between the time that you actually, let's say the time you report it, or the time you earn it, and the time you actually report it once it's paid, you could actually be issuing credits, you can actually be issuing refunds, and if possible, what you want to do is you want to wait until all of those things have kind of worked their way out of the system, right? So those are the preliminary concerns. And I want to talk a little bit about some preliminary methods right now, and preliminary methods. So I want to turn the corner here, and I want to just kind of think through, and this is probably going to be the case with anything, and I think I'm pretty much preaching to the choir, but I just need to say this. The key to a good analysis with these financial statements is going to be the fact that you have everything in there, right? Even if it's from your personal account. We talked about that in the 2 courses. And that you categorize appropriately. Now, categorizing appropriately really means categorizing in a way that you can actually use it to make decisions. Doesn't necessarily mean that you have to use the accounting definitions. Remember, this statement is going to be internal. You're the one that's going to be able to see it and use it, and so you want to make sure it's relevant. Now, the better you are at recording actual spending and income, the better information you'll have at decision making. So if you're in the habit, right, of being accurate or being timely about when you spend money, or when you actually are paid in your online business, the better your information is, right? And I don't have to say that to you. I'm pretty sure you know that already, but it bears repeating that Quicken is only as good as the information you put into it, right? Be specific about the categories of spending and use subcategories generously. Now, this is where I want to spend a little time here. For example, as an internet marketer, you can actually decide that one of your line items is going to be the PLR that you buy. And I really encourage you to do that, right? I mean, I don't know if I'd go beyond that. I don't know if I'd break it down further than that, like, well, written PLR or, video PLR. But I would have line items for the things that I buy based on these very basic buckets and categories, because this is what you're actually going to be tracking to make decision making. Services that you buy, software as a service or services, right? Make sure that you're specific about what it is, specific about the kind of service that it is. Any tools that you buy, right? Software tools. And once again, you could probably make the case, if you have already taken accounting, you know what an asset is, you could probably make the case that a software software piece that you bought, and let's say you purchased a lifetime license, then that's technically an asset, right? But I would not classify it as an asset. I would still classify it as an expense, right? And the reason is because, number one, you're not going to be able to sell it. Number two, it's not going to grow in value. Number three, it's just going to confuse the issue, right? And so I would say that even if you go out and you buy a software tool, you want to make sure that you use that as an expense. Any courses that you buy, right? Any courses that you buy, you should break that out. You should be specific about which course you bought. And I'm going to tell you why that's the case here in a minute. Be specific about categories of income and inflows, right? Use subcategories generously. And I'll show you what I mean by that. So when we start talking about the income and expenses, right? And I want to kind of come back here to the category list. So what I could do is I can do a number of things. I'm going to go pretty much to this business expense, and I'm going to enter a new category. And when I enter a new category, what I'm trying to do, obviously, is I'm trying to break out something that's going to be relevant when I start trying to analyze results, right? And I also want to do the very same thing with my income. I want to know when income that's coming in is affiliate income. I want to know when income that's coming in is freelance income. I want to know when income is coming in if it's product income. Right? We need to break those things out because this is how we're going to do the analysis. This is how we're going to tell how well we're doing at turning, let's say, turning cash into assets and assets into cash. Okay. Okay, so one category you could break out would be commissions, right? Sales commissions, because that's different from anything that you put together that you actually sold based on your own knowledge of the marketplace. Commissions, product sales, right? Product sales should be broken out. Referrals, like you get referral income, that should be broken out. I mean, you should not count that along with anything that you did as an affiliate or anything that you did as a product sale. Now, obviously, you're going to put all your sales together. You're going to have one number, but what you want to do is you want to have these individual levels because we want to be able to track that based on things that we have done in the past. I'll show you that here in a minute. So again, however you earn money as an online marketer, however you earn money as a digital business, you want to make sure that the different categories of ways that you earn cash, that you earn money, that you do that inside of the category area of Quicken. Now, if you get that, please put the number 1 in the question box if you get that. Okay, so also if you win an affiliate contest, you get prizes. Break that out. Now, again, I think you get the concept. I'm just giving you some general categories. What I'm telling you is, however you're earning money online, right? And once again, I need to say this. Now, if you're doing something like FBA or you're doing something like eBay and you have a lot of inventory, you should probably be using QuickBooks. There is a workaround. I covered that, I think, in the first course. I think I covered that in the first course, but if not, I definitely covered it in the advanced course. And what you want to think about here is that if you're gonna use inventory, you've got to account for the inventory as something called cost of goods sold, and that's a whole level of complexity that Quicken Home and Business does not cover. Right? So again, so if you've got an inventory business, you're doing Shopify, you're doing something like that, consider getting QuickBooks, which is very similar than Quicken, but then again, it's very different in some ways and a lot more complex for good reason. Right, for good reason. Okay, more preliminary methods. Now, the key to good analysis is going to be relevant data collection and categorization. And so one of the things I want to encourage you to do in your business regardless, and you're going to especially do this if you're going to start doing and you're going to start tracking your accounting, is journaling. Now, again, I realize that's a buzzword these days, but it's only a buzzword because somebody else discovered it and started marketing to people and showing them how to do it. But basically, journaling really means that one of the ways we're going to be able to go back and do analysis with our financial statements is we have to be able to look at a journal to say, to tell us what changes we made. What did we do on a particular day? So again, you don't have to open up your journal and kind of tell your life story for the day. What you do need to do is you need to kind of write down some basic things that you did at a particular day, because when you start to see, let's say, a spike in income or a decrease in income or some kind of spike in one of the numbers, you want to be able to go back to that journal. You want to say, hey, you know what, on August 16th, here's what we did that's probably causing the spike. Right? It's because, again, the analysis for this really happens in the journaling area. And so, again, be as specific as you can without making it an overbearing task. But you should be journaling about your business and about the things that you're doing. In fact, one of the things I've always said is that if you're actually going to go back and you're going to create an information product, one of the best ways to create an information product is going to be from your journal. Right? Because when you finally get to success in a particular area, right? People switch niches all the time, and then all of a sudden they're successful, right? You want to be able to go back, trace your steps, and then you want to be able to put those steps into an information product to help other people who have not had that success yet. The better you are about recording actual spending, the better information you'll have in decision making. We talked about that, so what I want to do, I want to kind of skip ahead here. I want to kind of skip ahead here. I want to talk about income growth, right? I want to talk about income growth. And we already know that net income basically equals revenues minus expenses minus any returns that we're going to have. And the fact of the matter is, some people kind of have all this calculus going on in their head, right? And if that's not you, this is kind of who this is for. You don't have to memorize. You don't have to know all of that. You don't have to carry that around your head. That's really what you're reporting this information into Quicken for. What you want to do is you want to use what are called comparison statements. Comparison statements. So how do we use comparison statements? Well, Quicken actually gives us these comparison statements. We can actually go to the reports. We can go to these business reports, and we can actually do what's called a product loss or cash flow comparison, right? We can do a product loss or cash flow comparison. What we're going to do is we can actually compare two columns. So I can compare the month to date, right? Then I can compare, let's say, a previous custom date, right? I can then go from, let's say, 10/1 to 10/31. Right? And basically what I'm doing is I'm comparing last month to this month. And again, Quicken will allow us to do that. And again, we want to be able to look at this because we want to say, hey, well, you know, if our income jumped, why did it jump? Is there something in our journal that we did on a particular day that would cause us to jump? Because obviously if we did something, we probably know about it already, but we may or may not necessarily have noted it down. And sometimes you don't necessarily know where a spike in income will actually come from. You want to be able to go back, use a comparison statement, and trace it back to some action that you actually took. So again, make your comparison statements using prior months or prior quarters in some cases. Sometimes it's relevant to actually do a prior quarter. So you're going to compare this 3 months to the last 3 months. And again, I think I said this before, and it really is true. Line up your findings with your journal, right? Line up your findings with your journal. Line up your findings with specific expenditures. So if you know if you bought something specifically on the on the 5th, and then you saw on the very next month you saw a spike, you want to be able to look back and see if that was it something that you bought, was it something that you spent money on. Specific launches. So if you launch a product, right, you want to be able to see the impact on net income. Now, net income is important because you can probably spend enough money and earn money. You can probably spend enough on ads or everything else, and you can earn money. But the question is going to be how much of that money you're going to keep. And if it's not income and you're not earning over and above the money you spend, then it may or may not be worth it in order to continue the path that you're on. So look at specific launches, look at specific campaigns, right? Specific marketing campaigns. So again, line up your findings, line up what's happening in a particular month to a specific campaign. See if you can determine whether or not the lag time is going to be the same for anything else you do. Maybe you decided not to take your money out of the business. You decided to buy something, right? How many times, when you keep your money in the business, does that lead to more profit? Again, you don't know until you actually look at the actual numbers. Line up your purchase. So in other words, and one of the reasons why this is important, because we want to be able to answer, two basic questions. If I put off a large purchase, right, did that increase or maintain profits? Right? If I put it off, did purchasing something with a bigger price tag later help me to maintain profits? Right? Did that happen? And so if it does or doesn't, you want to be able to answer that because, again, it's less important that you buy something during the launch than it is that you buy it when it comes time for your business, and that you actually buy it in a way that actually increases your net income. Right? The most important thing that you're going to do when you make a purchase is that you want to buy something that's going to increase your net income. And so the question is going to be, will launch products save you money? Right? If you don't buy this thing now, are you really going to be behind? Are you really going to miss? You're going to miss your capital if you buy it now. Is it better to purchase on a launch or off the launch? Right? Pretty simple question. The question you want to be able to answer with your financial statements, with your journal, is what is the impact of that purchase on net income? right? And then, so we encounter this question all the time, you know, as digital marketers. Should I spend the $97 now or the $297 when I'm ready? And the only answer to that is not going to be, yes, I saved $200. But typically, as what happens is, if you spend the $97 now, right? Are you actually putting off something that you could be buying that could be helping you to raise your income? All we're looking at is one side of the equation. If all we're doing is evaluating whether or not, right, the purchase is going to be more, right? It's less now, but if I don't get it, it's going to be more. That's not necessarily the whole of the equation. The other side of the equation is this: does it increase net income, right? When does it increase net income? So in other words, you bought this in April, but it didn't increase net income until August, and you know that could be for a number of reasons. But again, it's important for you to be able to figure out when those kinds of increases happen. It helps you to then make decisions about what you're going to buy for your business and when you buy it. Did you put off purchasing something that you need in order to get this thing that was on sale, because in order to get this thing that was from a launch, right? Again, even if you buy something that you need for your business now at full price, that's better than buying something at a launch, right? Even if it's half price. So again, the decision-making point here is that you want to use your financial statements to tell you what's happening when you actually make a purchase. What are you actually doing with or how your business is running? And this is a little more long-term. And this is something that after you've seen a couple of times, a couple of cycles, you'll be able to answer. But what kinds of purchases actually make the most impact on your income? Right? What kinds of purchases make the most impact on your income? This is actually going to give you another tool for making decisions. And that's really probably, if there's anything else that you want to kind of think through, you're gonna have a better tool to make decisions. Now, the visible nature also incentivizes you to take action. Right? That's sort of the other thing. And so what we're trying to do here when we actually take a look at our financial statements is we're trying to do what we can to, yes, make decisions, but also, though, for some marketers and for some people, seeing what something actually does to their bottom line, right? Seeing what it's actually doing to the income that you are trying to earn. Sometimes it will motivate you to take action when maybe you might not be as motivated, right? And looking at it to see if there's something that you are actually doing to cause income to grow, or if you're just playing, or you're just using this as a hobby, and you don't want to do that, right? But you do want to have accurate information. Okay, so any questions? Are there any questions about anything that we covered here tonight? We're about at 30 minutes, so I'm able to get you out of here on time. Any questions? Okay, everybody, well, thank you very much for being here. Have a great day and a pleasant tomorrow. Take care. Okay, so that was the recording, everybody. So that was the recording. I just had to do a clean break there. So if you have any questions, you can write them in. Basically, when you have an online business, the key to this is that what you're trying to do is you're trying to make sure you're categorizing things right, right? And as long as you know that you don't have to give these statements to anybody, you want to use these statements in a way that they work for you. So again, break out in terms of line items the expenses that you're using, so that when you start creating financial statements, you can then look at and see, oh, well, I bought this software in April and my income went up in May, and it was a result of this, right? And you want to, and again, the line item of income should be specific. So in other words, you should be able to say, well, I bought this software product, right, in April. In June, my affiliate income went up dramatically, right? We should be able to trace ourselves to those decisions. And again, all that has to do with the way that we're putting things in Quicken, and that we're tracking everything, right? So now, if you gained anything from the advanced course or this course, I'd like for you to do me a favor. If you go over to theplrshow.com/1122, and just give us a shout out there, right? If you pick something up from this, and I'm going to actually go ahead and put that URL in the chat box. All right. So again, if you picked something up from the course, you found it helpful, please give us a shout out over there. And of course, if we use your shout out in our marketing, make sure you put your URL in there so that we can direct people to your URL. Okay. Just so that you'll know, one of the other advanced courses. Not everybody saw this in the funnel, right, when they were going through, but you can actually get the Small Business Content Toolkit. That's still available. That's part of probably the part of the funnel that you may have seen. The other part of that funnel, it was the live course workshop, right? The plrshow.com/live course workshop. That is our PLR course. Now we do training in fact, we're going to be doing training tonight. So if you'd like to join us tonight for tonight's training, an Extreme Business Makeover, you can do that. And that's at superfastactionbonus.com/new XBT. That's going to take you to a page or a landing page, and then you can continue on to get the training. And then also, of course, please make sure that you're signed up for our newsletter. You can do that at theplrshow.com. Every Saturday night, most Saturday nights at 9 p.m. Eastern Standard Time, we do our weekend Q&A. And if we have your email address there, we will get you notice of that training. You can find our training archive at youtube.com/gainmindshare. And then you can also make sure that you get all of the training content archived in our group. That's at facebook.com/groups/the PLR show. Okay, so everybody, thank you once again for being here. I appreciate you all. Have a great night and a pleasant tomorrow. Take care.